Welcome traders, Maciej here from Taurus Trading. In this video you will learn the main categories of the bars as well as how to understand the differences between different types of the bars, so stay tuned. First I want to talk about the bar chart definition. Bar charts show multiple price bars over time with open, high, low and closing prices. Each bar shows how prices moved over a specified time period. For example, daily bar chart shows a price bar for each day, and an hourly bar chart shows a price bar for each hour. Candlestick charts have a vertical line showing the high and low of the period, but the difference between the open and the close is represented by a thicker portion called a real body. It is very important to understand that everything I'm gonna talk about today in this video, all the types and categories of the bars, they should not be taken out of the main context of the instrument that you are trading, but this subject I will leave for another video. So what are the main categories of the bars? There are two main categories of the bars. We have a bull bar with the closing price higher than the opening price, and this type of bar shows that buyers were in control during the given time period. So if you are watching a daily chart, that means that during the whole day buyers were in control. The opposite is true for a bear bar, which has a closing price lower than the opening price, and this shows that sellers are in control. So if you are watching an hourly chart of your favorite instrument, that means that during this very hour sellers were able to take control of the market. So now, since we know the two main categories of the bars, let's talk about how to understand the different types of the bars. First two are strong bull bar and a strong bear bar. Strong bull bar is the bar which has a closing price higher than the opening price, and there is no tail or so-called wick on the top of the bar. This tells us that buyers were very aggressive up till the very end of the given time period. With the strong bear bar, the closing price must be lower than the opening price. Also, there should be no tail visible on the very bottom of the bar. This tells trader that sellers were able to gain control over the market in a given time period. Obviously, the opposite of strong bar is a weak bar, and we have two types of weak bars. We have a weak bull bar, which has a closing price higher than the opening price, and you can expect to have a large tail on the top of the bar. This tells trader that buyers weren't very aggressive at the end of the given time period. With the weak bear bar, the opposite is true, so the closing price is lower than the opening price, and there should be a large tail on the very bottom of the bar. This tells us that at the end of the given time period, sellers weren't able to gain control over the market. Another type of bars are so-called doji bars. So we have a doji bull bar, which has the closing price higher than the opening price, but also have a relatively very small body and huge tails both on the top and the bottom of the bar. Doji bear bar have the closing price lower than the opening price, and again the body of the bar is very small comparing to the large tails both on the bottom and the top of the bar. These two types of bars are sharing the common characteristic, meaning that either buyers or sellers weren't able to take control over the market in a given time period. The best what trader can do when he sees this type of bar is to step away and don't trade, since after seeing a series of doji bars you can expect extreme moves in both directions, so there is no clear trend and it's very difficult to trade. And the last type of bar I would would like to talk in this video is so-called exhaustion bar. So we have an exhaustion bull bar, has the closing price higher than the opening price, and it shows that there was a buying climax taking place. Usually an exhaustion bar have a body several times larger than the average bar that you see on the chart, meaning that, for example, with the exhaustion bull bar, there were a lot of buyers panically buying. Probably there were some news announced. With exhaustion bear bar, the closing price is obviously lower than the opening price, and this type of bar is telling trader that there was a selling climax taking place. Usually you can expect to see an exhaustion bear bar at the end of the downtrend, and it tells trader that the last buyers simply gave up and their protective stops were run. With such a large bear bar at the end of the downtrend, you can expect at least correction for several bars or even a trend change. So you should be looking for a trend line or some resistant line break to enter in a direction of new uptrend. So thanks for watching, and I hope this was a valuable video for you. If so, please consider subscribing to my channel, since it will help me to deliver more educational content. Also, make sure to visit my website and grab the free copy of ebook I've prepared for you about financial markets, and I hope to see you next time.